Exxon Mobil, ticker symbol XOM, stock has been on a strong uptrend this whole year and has been overbought for this month on the technical RSI indicators. So is this a good time to sell Exxon or buy Exxon? To answer this question, we will analyze the trades of wealthy investors as usual and set up our options strategy based on how they are trading Exxon. Are they buying or selling? So without further ado, let's get to the data on the last trading day. As you can see on the options time and sales tape, we had these 3,000 and 2,000 contracts being traded for the same options, July 19, the 115 strike calls. They were paying 580 to 585 for each of these call options. They were being traded at about the same time, 12:51, just a few seconds apart. So let's take a look. These 3,000 and 2,000 contracts at the July 19th. So we can see here at the 115 strike calls, there's 6,200 volume, but there was 4,756 open interest, which is greater than the 3,000 and the 2,000 contracts. So these could have been closing trades. Okay, so this reduces our probability of profit when the data like this shows up. All right. That is why if you want the higher probability of profit trades, then make sure to go to our website where we share the trades of wealthy investors, where the data is a lot more clear as to what they are doing, so that when we trade, we have a higher probability of profit. Okay, we'll put a link to our website up here if you're interested. For this trade, we still traded it though. Okay, but we used our own option strategy. Now, because you can see that the total of the 3,000 and the 2,000, if we add this up together, this is 5,100, right? And because 5,100 is greater than 4,756, there is still some opening trades. Okay? So by opening these trades at the 115, where they were buying these for 585, you can see that this is a bullish long trade here. The x-axis here shows the share price of Exxon. The y-axis here shows profit. If the lines, the purple and the blue lines, are above this zero, this is profit. If it is below, it is a loss. So you can see that this is clearly a long bullish trade. As the share price of Exxon goes up, this becomes profitable. If it goes down, it becomes a negative loss. Okay, and we can see it more clearly also just looking at the Greeks. This is a positive delta. If it was a negative delta, it would be a short position. Since it's positive, this is a long position. Now, because this theta is negative 2.5, there is time decay risk on this trade. We set up our option strategy because the trade here, it does exceed, for example, if we take 585 and multiply by 3,000, it is a $1.7 million trade. But because of some of the data that is decreasing the probability of profit, we don't necessarily just want to follow the trade. We are setting up our own option strategy. okay, for this type of trade. And what we did, as we explained, is we wanted to reduce that theta risk. And in order to do that, we bought the 120 strike calls. Right here is our position. And we sold the May 17 125 strike calls. You can see our position here as well. So our trade here looks like this when we analyze it. This is a diagonal strategy. It costs $291 per trade, which is less than the unusual options at $585. Okay, and you can see that we are also going long, bullish, with a positive delta of 25, but we've essentially eliminated our time decay risk here with just a negative 0.18 theta. Okay, so that is why we use our option strategies and not simply always follow the trades of wealthy investors, especially a trade like this where it does exceed $1 million, but there are other data points that are lowering its potential probability of profit. Okay, you can see here that if Exxon goes up, this trade is also profitable. Okay, so this is a long bullish trade. This is how we are setting up our option strategies. So in conclusion, we are buying Exxon Mobil, expecting it to go up higher despite technicals indicating overbought conditions. But keep in mind, this is a lower probability of profit trade in comparison to the trades that we share on our website. For the reasons that we discussed earlier, and also the fact that Exxon is well correlated with oil prices, which is exposed to geopolitical macroeconomic risk. So if you want access to the higher probability of profit trades that we share, not like Exxon here, then go to our website. Put a link at the top here. And as usual, please smash the like button. Let us know in the comments below what you think will happen to Exxon Mobil. Will it go down or will it go up? Take care and have a great day.